This is Shelley Craft coming to you live on SNN Live. We're at the Sprott Natural Resource Symposium 2017 here in Vancouver. Standing with me today is John Kaiser. We're going to do a Wall Street view. John is Kaiser Research Online, and he's also a speaker at this conference. John, welcome back to SNN Live.
Shelley, it's great to be back here.
It's good to have you. Let's get started. Give us an overview first on Kaiser on your company, and then we'll go from there.
All right. KaiserResearch.com covers the Canadian and Australian listed resource sector companies with an emphasis on juniors. It's an online portal where you can search, but we also do recommendations of what we think is good speculative value in this space.
What are you speaking on at this conference?
The talk is the size of the prize, which is the huge problem that the companies have in figuring out the economic geology. If what they're looking for, they find it, what is it worth? But it's an even bigger problem for the public because the companies aren't allowed to say what it would be worth if they found it. So it's all about explaining how do you quantify the potential outcome and convert it into a number that relates it to the current stock price.
Within what you're allowed to say.
No, this is for as individuals, as an analyst, independent analyst like myself,
okay,
or as individuals. For example, last year we talked about the Share Collective that I'm a founder of, which is in beta testing. The crowd goes in there, puts in a deposit based on the dots that the company has published, hooks up a mine to it, puts approximate costs, pushes the magic DCF, discounted cash flow model button, gets a number, and then can relate it to how the market is pricing the project right now. And then they can say, is it poor, fair, or good speculative value?
So in reality, an investor literally has no idea right now.
No, it's very difficult. I mean, you need a spreadsheet to do this. You run a 20-year mine life. What are the revenues? What are the costs? You have copper grade, gold grade. You got to figure that all out. Your average individual is not going to bother setting this up. And a lot of companies don't bother either, which is why we have so many projects out there that have zero potential of ever creating new wealth. But this is part of the whole new trend. The hunt is there for projects, deposits that work with the metal prices that we have, not which we might have 10 years from now.
So what do you have to be, an analyst to figure this out?
Yes, analysts do that. And they have their little cash flow models. Or you need to be a qualified professional who puts out an economic study in a 43-101 report, and that costs millions of dollars and many years. And the public in the meantime is in the dark. What do all these assays mean? Is the stock too expensive, or what should I do? This is a way of enabling the crowd to figure it out on its own, and it's going to help the industry a lot because companies, by publishing very good information, organized in a way so that you can make sense of it, they'll be able to let the crowd figure out how to connect the dots and understand what it is they're trying to do and be able to raise the money to do the job properly. Whereas right now, pricing is difficult because the crowd just doesn't know how to value the size of the prize.
But isn't the outcome of your results only as good as the data input?
Yes, but that's where the 43-101 reporting rules that the Canadians invented, which are pretty brutal, this guarantees that the data published is reliable. Now, what it means is a completely different thing. And the crowd, it's entitled to dream, and it's entitled to share those dreams with the public. The regulators can't say a thing about that because at the end of the day, the qualified professional produces the definitive study that shows who was way off, who was too optimistic, who was too pessimistic. It basically says, here's what the professionals say based on all this reliable information.
So, John, not only is this good for investors technically, but isn't it good for the companies also that want to take the next step in development into production?
Yes, but it's more useful for the ones that haven't yet done an economic study, that have a new discovery or are hoping to make a discovery. So the crowd can go and say, well, we think this is going to be another SK Creek deposit. Well, if SK Creek existed, what would it be worth? People shrug their shoulders, have no idea. But this way you can just take the old numbers, hook up modern results and say, oh, this would be worth $3.2 billion if somebody found it today. And then it's at the target testing stage. Well, it gets to be worth about 2.5% to 5% of that. So that's your fair value. And then you know what numbers you need to come out. So when the company publishes, say, 2 ounce per ton intervals, then you know you're in the game for an SK Creek. If they come in at 2 grams, well, you plug those numbers in and you come up with a, $50 million value rather than $3.2 billion.
So how far along are you on developing this product?
Oh, this is in beta testing mode. Hopefully it goes commercial by the end of the year. And anybody interested in wanting to become a beta tester should get in touch with me at jkaiser@kaiserresearch.com.
All right, John, give me your website for our investor audience, if you would.
kaiserresearch.com.
Ladies and gentlemen, John Kaiser. This was a Wall Street View from Kaiser Research Online, and he's a speaker at this conference. I'm Shelley Kraft. This is SNN Live, and we're coming to you live from the Sprott Natural Resource Symposium 2017 right here in Vancouver. John, always good to have you on.
Thank you, Shelley.